Hello everyone and welcome to FX Addicts Weekly Currency Update. This is Tim, the Currency Professor, and today is May 11th, 2012. Well, we've had quite the week, really. It started off with the euro gapping lower against the dollar and pretty much never really filling that gap. So we have declined now for most of the week, and we are now below 130. And we're going to close the week out here at a level that's at the lowest that we've been at in several months. So we're breaking that long-term range that we've been bound to since about the middle of January. So this is a good thing because it's going to hopefully spark some additional activity here. On a daily basis, we can see that we're very, very oversold here, especially when we look at the stochastics. But that doesn't mean we can't go lower either. We are in need of a bounce, though. And technically, if we bounce back up then to that gapping area and then fell off, it would certainly be healthier for the market. And on the weeklies, we can see that gap still in there, and we're well below now that upper channel line. And it looks like we're going to start to slowly fade off here, and this could take several weeks, probably even several months, where we would work our way down to the lower end of that channel. That would get us down to, currently that's residing about 118, but in theory, as time goes on, if it took several months, that could be considerably lower. And if we look here on the monthlies, we could see how that could happen also. Within several months, we could end up down here around 113 area. So again, it could take several months, and we could have a couple of months in there where it backed up a little bit, bounced higher, and then fell off again. So over time, though, it looks like we're going to continue on this downtrend and work our way lower. British pound against the dollar, pretty big day today. We're down 71 pips. The largest day that we're going to close down here in quite a while. We're right at the point where we were a couple of days ago, where we made lows for the days, but then rallied back. Today it does not look like we're going to have that rally back. We are heading for this minor support line down here, which is just below 160, and we could probably get there next week, the way it looks. By the middle of next week, it'll be just under 160. So it's very possible we could get to that point and then rally back up and test these highs. Ultimately, we should at least test those highs before falling off completely. On the weeklies, we can see that we have this minor trend line. We went up for 2 weeks. We bumped up against it, passed it just slightly, and then now we have sold off. So technically, we should rally or should fall back down to the lower end of the trend line here, which is at around 154, just under. Now, if we look here at the stochastics, this is kind of an ominous sign here because we've been up in this area on the stochastics since really the beginning of February, end of January, and we've had these 3 bounces here in the stochastics, and this last time we made a lower low on the stochastics and a higher high on the pricing. So we have a divergence there. More than likely, then this is going to be a continuation lower as the stochastics continue to grind lower here. The pricing will certainly seek a lower level. So really looking for that to happen over probably a 6 to 8 week period, if not a little bit longer. And we look here at the monthlies too, we can see we've had 4 very strong up months, and this month now, about halfway into it, is shaping up to be a pretty decent down month. So we could have a couple of down months here where we sell off, and then there's a possibility we could rally back up slightly and then fall back down to this lower trend line here, which is around 154. So that looks like it may be the end of it. Ideally, we would like to see it rally back up into here, which is around 166, 167. If it rallied back up in there and then fell off, it would kind of complete this whole pattern. But it could be very weak in the interim also and just continue on from here lower. So technically technically it's still a weak market. We're just having a consolidation or a correction here in a normal down market. U.S. dollar against the Swiss franc. Had a very nice week this week, up quite a bit, continuing from late last week's rally, and we are pushing now the upper limits here that we hit back in March, and it looks like we'll probably exceed them. Probably not within a few days, but maybe within a few weeks. Technically, we need to sell off here a little bit. As you can see here in the stochastics, we're very, very overbought. So a little bit of a pullback here, probably down into the upper 91 range would be healthy for it, and then we could rally back again. On a weeklies, you can see how we almost gapped here and rallied up this whole week now. So we got two very good positive weeks here, and stochastics look very strong on the weeklies. And on the monthlies also, we look very strong here. The spike low down below that range, and then we're moved up here, and looks like we're going to start on the next move up. So theoretically here we could rally up to the upper trend line, which would be about 102.50. And ultimately, because of this spike low, we should exceed that at some point in the future. So as time goes on here, 6, 8 months, a year away, we should be well up above that and making new highs there for many multi-year highs. U.S. dollar against the Japanese yen. Well, we're down 2 pips today. We've had some consolidation this week. Really not a whole lot of action. Pretty much stayed in the same range all week. So that's a good thing, because we've had now a pretty decent retracement, and it looks like we're starting to form a bottom here. We can see how this is kind of coming together a little bit. So we're starting to get this peaking point here, and we've seen that several times before in the Japanese yen with the dollar, and that usually means that it's going to explode to the opposite direction. So in this case, we'll explode to the upside. On the weeklies, very nice correction on the weeklies, and again, you can see how the weeklies are thinning out here, smaller and smaller ranges. Usually means that we're going to turn around here. So it's probably within a week or two that we actually do that. And on the monthlies, this month now halfway into the month, very small range for the month. So we could have a fairly decent move here yet this month with the 2 weeks left that we have, and possibly even get up close to the highs of last month. So overall, still looks very, very strong. Euro against the Swiss, very small range still, even smaller than last week. So we're continuing to see very, very little movement, and volume has dried up considerably also. If we look here at the hourlies here, we can see on the 4-hour how the volume is just very much dried up. We don't have those large spikes, intraday spikes, that we had before. So a lot of players just abandoning that market and looking for something else. That is usually when things do happen. So as we get smaller and smaller in our daily ranges, and that volume shrinks up, that is an opportunity for something to happen eventually. So a lot of these crosses are starting to show a potential for a fairly decent burst, a large burst, and in one direction or the other. Euro against the yen, kind of the same thing here. We're starting to turn the corner. We've had a couple of nice sell-offs here, and we're down into a which should be a potentially supportive area, because we have this and then this high back here and this high back here. So that should pull us down, maybe down into the 102 area, and we should bounce around in this area between 102 and 103.25, 103.50 for probably a couple of weeks here. And if we look at the weeklies, we can see that also. Again, it's starting to get smaller and smaller here as these weekly ranges get smaller and smaller, and the movement gets smaller and smaller. So that is usually an indication that the market's going to turn around. In this case, we would go back up. Test these highs around the 110, 111 area. We've talked about this many times. It would really need to get up here around 110 and 111, maybe even 112 to kind of complete this pattern. it would be healthier for the market if it did that, and then it could sell off substantially after that and get down to the lower 90s, upper 80s. So that is it for this week. Please stop by fxaddicts.com. Hopefully you made the webinar that we had the other day on scalping. If not, it is recorded and it is on the Trader Kingdom website. So feel free to take a look at that. And if you have any questions, by all means, contact me either by email or by phone. I'm available pretty much 8 to 8, Monday through Friday, Eastern Time. Thank you.